Morning and welcome to this webinar on the Aether Industries IPO. We are fortunate to have with us the promoters of Aether Industry and the CFO. We have Dr. Aman Desai, who is a promoter and a whole-time director. We have Rohan Desai, who is also a promoter and a whole-time director, and we have Faiz Nagariya, the CFO of the company, who will share the background of the company, the strengths and weaknesses and the concerns for the benefit of all the viewers. Now, Aether Industries is a specialty chemical manufacturer in India, focusing on producing advanced intermediates and specialty chemicals involving complex and differentiated chemistry and technology core competencies. It is one of the fastest growing specialty chemical companies in India, growing at a CAGR of about 50% over the last 2 or 3 years. It has reported very good numbers so far, and it will be interesting to go through the presentation and know more about the company. So now I hand over the proceedings to Dr. Aman. Would you like to say something, and then we go to Faiz?
Yeah, thank you, Deepak, for having us. It's a pleasure to be here and be speaking to this audience. We look forward to introducing our company. And so the presentation will be started by Rohan, and then I will take over in the second half. And so I think without any further ado, let us begin, please. Thank you.
Sure.
No, thank you, Aman. Thank you, Deepak. Good morning, all of you, and welcome to Aether's Roadshow presentation. Today's presentation would be led by Dr. Aman Desai, Rohan Desai. Both of us are the promoters and the whole-time directors at Aether. And along with us, we have Faiz Nagariya, who is the CFO of Aether. The presentation would be covered in 5 parts. First is about Aether. Second is key investment highlights. Third is our strategy. Fourth, financial summary. And fifth, annexures. In the interest of time, we would not be spending much time on financial summary and annexures, and we'll use it in the time of Q&A session. This section will give you a high-level overview of Aether. Aether was established in year 2013 with a focus on core competencies of chemistry, technology, and systems. These are the 3 circles under which Aether operates, and the product selected, developed, and commercialized falls in the center of these 3 circles, which we call the sweet spot. We have developed chemistries like Grignard, ethylene oxide, tandem Grignard and ethylene oxide chemistry, isobutylene chemistry, hydrogenation chemistry, asymmetric hydrogenation, heterogeneous catalysis, cross-coupling chemistry, olefin metathesis, polymerization chemistry. And what we do is we marry this chemistry sets to technologies like continuous reaction, batch reaction, high pressure reaction, fixed bed reaction, cryogenic reaction, high vacuum distillation, wide film distillation, and process automation. We are among the few companies in India to practice these combinations of competencies under one roof. We have also developed systems like SAP, AES, Aether Emergency Response Systems, and have implemented system certifications like ISO 9014, Indian OSHA's, Indian GMP, and ISO 27000. We are among the very few companies to have ISO 27000 certification, which focuses on information security management systems, which is important for IT protection. Also, both the sites are totally automated on DCS automation of Centum VP Yokogawa, which is from Japan, and Siemens PCS7, which is from Germany, which is arguably the best systems for automation in the world today. This focus on core competencies have helped us identify and zero in on the products. The product selection for Aether is quite straightforward. Once the product falls into the sweet spot, which is the center of 3 circles, we apply certain refinements to arrive at a right fit. The first refinement is there should be no manufacturer of this product in India. Means we should be the only manufacturer of this product in India at the time of evaluation. The second refinement is the product should be manufactured in infrastructure-oriented plant and should be made by minimum of 4 synthetic step sequence, which creates an automated entry barrier for any other company to come into competition with us. The third refinement is the product should be able to generate adequate revenue for us at maturity. And the fourth and the final refinement is the product should be able to generate market leading position for us at maturity. Once the product passes through this refinement, which is depicted in the form of the funnel in this presentation, we take this product up into our R&D, scale it up into our pilot plant, and commercialize it into a large scale manufacturing plants. We are among the very few companies to launch 3 independent business models in 5 years of commercialization. 70% of our total top line comes out of large scale manufacturing business model. 7% comes out of contract research and manufacturing services business model, which funnels into the third and interesting business model, which is contract/exclusive manufacturing, which constitutes of 22% of our total top line. Below are the graphs which show that all the business models are growing rapidly and sustainably, and we'll talk more on each of these models in the key investment highlights section. Ether from financial year 2019 to 2021 has grown from 2,000 million rupees to 4,500 million rupees odd, which is at a CAGR of 49.4%. At the same time, the EBITDAs have grown from 24.4% to 25.6%, and PAT has grown from a mere 11.5% to 15.7%. As of December 2021, which is 9 months ending of financial year 2021-22, our gross revenue stands at 4,493 million rupees. Our EBITDA stands at 29.6%, and PAT stands at 18.5%. Sales mix stands at pharma 63%, agro 23%, material science 4%, high performance photography 4%, coating 3.5%, and oil and gas as 1.2%. Export stands at 63%, which includes exports in EOU unit and SCZ units of India, and domestic sales stands at 37%. If you want a rough geographical split, we are 50% outside of India and 50% inside of India. Aether's growth is led by key pillars who have extensive domain knowledge and proven track records of 125 plus years. Mr. Ashwin Desai is the founder, promoter, and managing director of Aether. He is a Bachelor of Chemical Engineering from UDCD Mumbai 1974 batch. He is a distinguished alumni of UDCD 2010. Prior to Aether, he was a founder and chairman and managing director of Anupam Rasayan India Limited, which is also a listed entity in Indian Stock Exchange. He is one of the few persons in the spec chem space whom we know of who has started 2 companies from the scratch and have developed 50 plus products for the first time in India. He is a visionary force of Aether with multiple decades of experience. Dr. Aman is a promoter and a whole-time director at Aether. He is a Bachelor of Chemical Technology from UDCD Mumbai 2005. He is also a PhD from Michigan State University, USA. He has worked for Dow Chemical Company for a period of 3 years spanning from 2010 to 2012 as a project leader in co-R&D group. He is a co-author of 25 plus publications and has 4 worldwide patents under his name. He has 10 plus years of experience in the spec chem space. Rohan Desai, which is me, I am a promoter and a whole-time director at Aether. I have a Bachelor of Commerce from Veer Narmad University, Surat. Prior to Aether, I was a director at Anupam Rasayan for a period of 10 years, where I handled overall commercial and portfolios and systems. Over at Aether, I broadly handle all the commercial portfolios along with the systems, and I have 18 plus years of experience in the spec chem space. Ms. Punyava Desai is a promoter and a whole-time director at Aether. She is a Bachelor of Commerce from Delhi University 1975. Prior to Aether, she was a director at Anupam Rasayan India Limited for a period of 35 years, where she led the overall finance and accounting portfolios and continues to lead the same portfolios at Aether too. She has more than 4 decades of experience in the spec chem space. We have in place highly experienced and diverse board to guide us, help us, and advise us on various strategies. In the interest of time, I would not be spending much time on this slide, but I would like to summarize our board in one paragraph. Our board has the right mix of experience, diversity, and technical background. Mr. Jivanlal Nagori, Ms. Leja Hatangadi, and Dr. Amol Kulkarni bring strong technical experience in the field of pharmaceutical projects and continuous reaction technologies. Whereas Mr. Kamal Tulsian, who is a chairman of our company, Mr. Arun Kanodia, and Mr. Jitendra Vakaria, brings business and commercial expertise to the table. Along with the extensive board, we have a nice team of senior management personnel and key management persons. These 3 gentlemen signing up for Aether is a true testimony to our success and key drivers for a promising future ahead. They are as good as it gets from the experience point of view and profile point of view, and they being located in USA and Europe gives us strong connect to the top echelons of the marquee clients of these geographies. From the top left, Dr. James Ringer is the business development leader in USA. He is associated with Aether since last 1 year. He is a PhD in organic chemistry from Wisconsin University, and he has 30 plus years of experience at various director level positions at Dow Chemical Company and then in Corteva. and he is a co-inventor of 22 patents. Mr. Raymond Roach is a business development leader in USA. He is associated with Aether since last 7 years. He is a Master of Science, Master of Chemical Engineering from University of Pittsburgh, USA, and he has decades of experience in various R&D level positions at Dow Chemical Company. He is also a co-inventor of 7 patents. Dr. Norbert Flugen is a business development leader in in Europe. He is a PhD in natural science, University of Hanover, Germany. He is associated with Aether since 1 year. He has decades of experience in various multinational companies in Europe, spanning from Bayer Crop Science to the last position where he worked as a CSO of Altana AG, which is a $3 billion BMW group company. Mr. Faiz Nagariya is a CFO at Aether. He is a Bachelor of Commerce and Chartered Accountant by qualification. He has 25 plus years of experience in various industries and is associated with Aether since last 3 years. Yeah, the evolution of Aether has been an interesting one. We are one of the fastest growing spec chem company in India today. We have divided the evolution in 3 phases for your better understanding. Phase 1, which we call concept to create, spanning from year 2013 to 2016. Ours is a journey which commenced in year 2013 with a lot of thoughts on how we wanted to approach our business. We built our skills by entering into R&D site, which is Site 1 in July 2013, and handled complex chemistries and technologies. We selected the products ourselves, developed the processes, designed our equipment, and constructed a fully automated production facility in the matter of 15 months by digging hole in the Greenfield project in May 2015 and starting first stream of production by October 2016. Aether during this time grew from 0 to 200 in terms of the team, and we had almost negligible revenue during this period. Phase 2, create to build, spanning from year 2017 to 2021, where we started our monetization activities. Our revenue grew from 1,000 million rupees to 4,500 million rupees. We streamlined 22 products into manufacturing, which is on an average of 5 products in a year. Most of the products were manufactured for the first time in India. According to the RHP, where we have mentioned 8 products, we are the largest manufacturer of 4 products in the world and the only manufacturer of 7 products in India. During this period, we have received 5 accreditations, which I have already mentioned about. We have 130 plus customers spanning across 17 countries, including of India. We have a core R&D team of 81 people, and we are 700 people strong during this period. Phase 3, build to scale, 2022 onwards. We feel that we have a right building block to grow in the future. For that, we have initiated the expansion in Greenfield project, which is Site 3, which is due to be completed in this calendar year. We are in the process of acquiring the land for Site 4, where the expansion is due to be started in next 2 or 3 months. We have a strong pipeline of products and also have an ability to increase the wallet share in the existing product. We are also continuing to add to our core competencies of chemistry and technology, which we call 8x8 matrix. We are doubling our R&D capabilities and tripling our pilot plant facilities as we speak, which is due to be completed in the next 3 months' time. We are also looking for acquisition opportunities in USA and Europe for R&D and manufacturing assets with differentiated technologies. I would pause over here and ask Dr. Aman to talk more on key investment highlights and take this presentation forward. Aman?
Yeah, thanks, Rohan. So we have 2 sections remaining, investment highlights and strategy of the company. And I'll just focus on a few slides in these 2 sections, and then we can go into detail in a few slides, and then we can have enough time for Q&A. So in a matter of 5 years, we have created successfully 3 different business models. The first one is the large-scale manufacturing business model shown on this slide, where we select our own products as per the selection criteria that Rohan has already highlighted in the first part of the presentation, where we are the only ones in India making these products. It's a good fit for our competencies, good value, good price. And then we make these products for the first time in India. As you can see from the bottom right of the slide, 70% of the revenues is contributed by this business model. And so historically, this has been the driver of the company. This is done in state-of-the-art manufacturing facilities with the highest levels of technology, engineering, and automation. We have a packed R&D pipeline in this business model. We are launching 5 new molecules in this year in the upcoming Greenfield production site in this business model. And so historically, the driver of the company, a packed R&D pipeline, and hopefully will continue to drive the growth of the company in the years to come. Even more exciting and having a higher potential for growth are the next two business models, which is on the next slide, which is the contract research and manufacturing services, the CRAMS business model, which funnels into the exclusive manufacturing business model, currently occupying 30% of the revenues as shown on the left side of the screen, both of these combined. And the conscious push of the company is to make this a balanced basket and equitable proportion as compared to the large scale manufacturing business model. What we do in this business model is we participate in the pipeline molecules and launch molecules of various innovator multinational companies across the industry spectrum. We enter when the decision to commercialize has been made. So we do not do discovery research, we do process development research, and we participate with the R&D teams and technology teams of these innovator companies in the entire life cycle of the launch, starting from the first few kilogram requirements, samples to hundreds of kilos for field trial in the case of an agrochemical, or clinical trial in the case of a pharma, or application testing in the case of material sciences, all the way to launch quantities to commercialization under exclusive supply agreements, which then transfers the project into the contract manufacturing business model. And so these are very carefully curated relationships that we have established now at the topmost technical echelons of numerous innovator multinational companies across the industry spectrum. We'll show you the customer list in a slide that is coming up, but these are projects which are patented molecules and pipeline molecules, and these are projects with the horizons of between 3 to 15 years. And we've been working on some of these projects now for the last 6 to 7 years. And so a trusted partner now with these innovator companies in the CRAMS and the contract research and contract manufacturing space. And as the world opens up in a post-pandemic arena, we anticipate a significant opportunity for growth in this business model. A few examples are shown on this slide. The DVL product is a material science product to the German multinational company. Started as a research project a few years ago, 6-7 years ago, and today is a exclusive 5-year supply agreement, 200 tons per year level of supply to this German multinational client. The second row on the top right table is a polymeric product for a major oil and gas company, a very interesting one. Started as a multi-million-dollar research program about 6-7 years ago. Today we are supplying about 50 to 60 tons per year for this customer, this major oil and gas company, which is their sample quantities, which we make and pack and ship on their behalf to their customers worldwide. And cannot talk about future leading statements right now, but this promises to be on the cusp of transferring into the contract/exclusive manufacturing business model. The bottom right table shows you the 2 advanced intermediates for the agrochemical active methoxyphenoside, which is again started as a research project about 4 years ago, and 3 years ago it launched into an exclusive 5-year supply agreement based manufacturing for one of the top 3 agrochemical innovators of the world. Top line revenues for us as of last year. And so very exciting and having a high potential in these 2 business models. We are significantly differentiated as compared to other specialty chemical companies in these 2 business models. We have a trusted partner. We are the preferred partner for research and technology and scale up for various innovator companies now in these 2 business models where we participate in pipeline and launch molecules. So going on to the next slide, we go back to the large scale manufacturing business model. And next slide, please. And the left side of the slide shows you 24 products, out of which most of them have been launched for the first time in India by us, highlighting 8 products in this RHP, and will come on the next slide. But in this slide, I did want to draw your attention on the bottom right table where we differentiate between the Aether specialty chemicals as compared to regular specialty chemicals. Faiz? Excuse me.
Can you see the screen?
Problem and gets us. No, we cannot see the screen. Yes.
Now?
We're back now, Faiz.
Yeah. Yes, Faiz.
In the bottom right table, we differentiate between the Aether specialty chemicals as compared to other specialty chemicals. Well, if you look at the average price per kilo, or the number of steps in the manufacturing process, or the number of stages remaining till the active, we are far more advanced in the value chain as compared to regular specialty chemical companies in India. You have the commodities and you have the actives in the middle. You have specialty chemicals, and specialty chemicals has become a very loosely used term now. But in the range of specialty chemicals, we are firmly in the high value-added range of specialty chemicals, and from that point when we make the statement that our products have applications across the industry spectrum: pharma, agrochemicals, material sciences, photography, coatings, additives, and oil and gas. I think there's a special differentiation in that statement as compared to any other spec chem company making the same statement. And so I did want to emphasize on this differentiation on this slide. The next slide brings you to the 8 products that we are highlighting in the RHP and our IPO marketing. Truly powerful products. The third column shows you the industry application, pharmaceutical, agrochemical, and material sciences. And the fourth column shows you the market leading position that we have, where in 4 of these 8 products, we are the largest in the world. And in 7 of these 8 products, we are the only ones in India making this product. The only exception where we have a competition in India is molecule number 6, HEEP. But all the other manufacturers making this product in India import a key advanced intermediate from China. We make that advanced intermediate ourselves, and we are back integrated all the way to commodity chemicals. And we are the largest in the world for this product. And significant headroom for growth in these molecules as well, although we are not highlighting that headroom in our projections that have been provided. We are only highlighting the headroom, only highlighting the growth from the new launch molecules that we have in our projections. Before we started making these products in India, till today, we remain the only ones in India making these products. Before we started making these products represented hundreds of crores of imports into India. We have essentially stopped all imports into India, and now we are exporting these products in the global market as well as into China. And so inherently, we are a Make in India, and the Atmanirbharta concept is an inherent embodification in our company. So moving on, I'll start to speed up a little bit now. I'll just focus on a few slides so that we have enough time for Q&A. Did want to focus on the customer clientele list. This represents a significant differentiation, we believe, as compared to any other spec chem company in India. This represents only the customers who have actually given us consent to publish their name as our customer. And if you think about multinational companies and the pain that is involved in getting a consent to publish their name externally, it's significant. And the fact that we have the names that you see on the slide here speaks to the levels of engagement that we enjoy at the highest technical echelons of these various companies. And this represents only about a fourth of our customer base, because these are the companies who have given us consent. Others, unfortunately, could not give us consent. But you name the pharma in India and Europe, and they are our existing customer, the Divi's, Dr. Reddy's, Lupin's, Moes in Spain. They are our existing customers. Adama is the largest generic agrochemical manufacturer in the world, and they are our CRAMS customer for the last 6 years. Deccan and UPL are significant customers. Also working with three of the top 5 agrochemical innovators of the world. Unfortunately, could not get consent. We are working with 3 of the top 5 oil and gas companies of the world. Could obtain consent from Saudi Aramco. And the fact that we are able to obtain consent from a company like Saudi Aramco speaks to the levels of engagement that we have in the contract research and contract manufacturing space with Saudi Aramco. Milliken is the largest textiles company in the world. Polaroid is the largest high-performance photography company in the world, based in Germany. Altana and BYK are $3 billion material science companies in Germany. Avient is a material science company in UK. Toso is in Japan. And so while the Divis of the country have been doing this in the pharmaceutical space, and the Deccans of the country have been doing this in the agrochemical space, and we are doing this extensively in the agrochemical space as well, the contract research and content manufacturing business model. The non-pharma, non-agro sectors shown on this slide, we believe, represents a significant differentiation for us, where this is virtually untapped territory in these sectors by Indian contract research and content manufacturing players. And now we have been working with these companies for the last 5 to 6 years, and we are a preferred partner now as they look at partnering for developing the process, scaling up the molecules, and going towards commercialization of their new pipeline molecules and launch molecules. Going on to the next slide, I'll just like to go to the R&D slide, maybe. I did want to emphasize the R&D expenditure. 5.4% of the annual revenues of the company are R&D expenditure, which is a significant differentiation as compared to others. 92 scientists and 72 engineers in the R&D. And this was infrastructure that was existing as of 2 weeks ago. All the growth of the company that has been seen in the last 5 years is a derivative of products and projects that have always gone through R&D. And so the R&D infrastructure that we had as of 2 weeks ago has been responsible for the kind of growth that the company has seen in the last 5 years. As of 2 weeks ago, we have doubled that R&D infrastructure. And in the next 2 months, we are looking at almost tripling that R&D infrastructure. And so a significant expansion in the R&D. This 5.4% of the R&D expenditure expense as compared to the overall revenues will probably remain that way as the top line of the company grows. And so we are looking at investing incrementally more significantly in the R&D area. Next slide talks about the core competencies of chemistries and technologies. I can talk about this slide for a whole day, but suffice to say that this 8x8 metrics of chemistry and technology core competencies that we have developed, which forms the fundamental base of the company, which is a significant differentiation as compared to other companies. Other companies are founded with a focus of product or industry or customer. Our company was founded with a focus of core competencies of chemistries and technologies, 8x8 metrics. These are truly unique, niche, differentiated, and at the volume and scale and complexity that we are executing these competencies, we believe it is truly unprecedented in India. And this forms the base of the company, and all the products and all the projects and all the customers are derivative of these fundamental base, which is the core chemistry and technology competencies. Moving on, the next slide talks about quality, environment, health, and safety. I will not belabor this too much, but suffice to say that we stay current with European norms, which are about 7 to 10 years ahead of Indian norms. 100,000 liter per day in-house, zero liquid discharge waste treatment plant, multiple certifications that you can see in the bottom of the slide, significant workforce, and a massive investment of time, energy, resources, and money in QEHS, and rightfully done so for sustainability, for long-term growth, and for differentiation. Next slide talks about CSR activities, significant work being done towards education in India, but I will not belabor this too much. Let's go on to the next slide, which is the financial metrics, and I'll invite Faiz to give you the 2-minute version of this slide.
Yeah, sure. Thank you, Dr. Aman. So before I begin, I would like to emphasize on the fact that the company was started in 2013, and it's been only 9 years, and the company started its commercial production in 2016-17 in the last quarter. So taking into consideration the very young financial metrics of the company, the revenues of the company have grown at a CAGR of 49.5% between financial year 19 to financial year 21, which has enabled the company to have healthy levels of EBITDA, which have grown at a CAGR of 53% in the financial year 19 to financial year 21, which has enabled the company to capitalize on the paid margins, which have increased a CAGR of 74.6% between financial year 19 to financial year 21. The revenues for the 9 months ended 31st December 2021 for the company were 4,425 million rupees with an EBITDA level of 29.6% and PAT level of 18.5%. The company enjoys healthy returns of ROC and ROE, which were 28.5% and 40.8% respectively for the financial year 21. The turnover ratios of the company have been better or in line with the company with the industry standards, except that the inventory turnover ratio, which is a bit on a higher side because we hold raw material inventories for a longer period of time for 4 to 6 months in order to cater to the ever-increasing demand from the current customers and ever-increasing new customers. The debt servicing has never been a problem for the company, and debt equity ratio has been becoming favorable to the company year-on-year basis. And the net debt to EBITDA ratio is also very much better than the industry standards. Back to you, Dr. Aman. Thank you.
Yeah, sorry, I was just finding the mute button. But anyway, thank you, Faiz. So we have one more section remaining, the strategy, and I'll just focus on 3 slides on the strategy because I think we have spoken enough on the strategy of the company already. Did want to focus on the expansion activities that are happening in the company. We are launching 2 new greenfield production sites as an expansion in the near future, where one is almost nearing civil completion and we'll be installing reactors in a month's time. And this first greenfield manufacturing site will be on stream by the end of this calendar year 22, and the next one hopefully by the end of next calendar year 23. And so this will represent 1.5x the production capacity that we have today. Also mentioned in the RHP is the fact that we have purchased a land bank in Panoli GIDC, which is 126,000 square meters, which is 12 times the land bank that we have today. And so 1.5x the production capacity that we have today, coming live by in the near future, and 13 times the land bank that we have today for production already procured as land for subsequent production expansions. As of 2 weeks ago, we have doubled the R&D infrastructure, and over the next 2 months, we are going to triple the R&D infrastructure. And as of the last 6 months, over the last 6 months, we have tripled our pilot plant capacity, resulting into what we proudly claim to be one of the world's largest pilot plants today. We also invested in electrical solar power plant, 16 megawatts, already done 2 months ago, and that is going to go live by July. And the right side of the slide shows you the advanced intermediates for the 5 APIs that we are launching in this year as new product launches in the upcoming greenfield production site. And these all 5 advanced intermediates for the 5 APIs shown here are going to be manufactured by us for the first time in India. Next slide talks about the strategy of the CRAMS business model, which is going to remain a key focus of the company. I think I've already talked enough about this business model. So let's just go to the penultimate slide now, where we bring out the 4 promoters again. Our father, Ashwin Desai, is a chemical engineer, UDCT 1974, 1976 to 2012. He was the founder, chairman, and the managing director of Anupam Rasayan before he fully exited the company. I don't know of anybody else in the Indian specialty chemicals that has opened 2 different companies from scratch, introducing products for the first time, different products for the first time in India for both companies. And both companies are now publicly listed companies. Anupam already is, and we will be in a few days. Also one of the finest chemical engineers I know in the country. I have a bachelor's in chemical engineering, a PhD in organic chemistry. I worked in the central R&D headquarters of Dow Chemical Company, the second biggest chemical company of the world, for 3 years as a group leader. 30 publications and 4 patents to my name. And so in the 2 main technical arms of the chemical industry, which is organic chemistry and chemical engineering, there's technical excellence in the promoter family itself. Rohan, more than 20 years in the finance, procurement, sales, management side, and the commercial aspects of a chemical industry, first with Anupam Rasayan and now with Aether. Our mother, still very active, 35 years as a director of accounts and finance at Anupam Rasayan and now at Aether. And so there's true techno-commercial excellence in the promoter family, and we drive from the top. And as investors, you're looking to get into, you're deciding which bus you want to get into. I believe you want to get into a bus which is driven by the promoters. Also, there's a very clear distribution of work profiles. In the older generation, you have techno-commercial, mother-father, clean distribution of work profiles, which makes for a very sustainable growth model in the future. We have been manufacturing only for 5 years now. I'm 38 years old, Rohan's 42 years old, and we easily have 3 to 4 more decades of building the Aether Industries as a company. We also have a 700 plus staff at Aether. The average age is 32 years only, and so it's a very young company, a very dynamic company, a very hungry company. And then we have these 3 gentlemen who have joined us as well. Rohan has already introduced these 3 gentlemen, and so I will not introduce them again, but these are not your regular sales rep or marketing reps. These are true techno-commercial leaders who have spent more than 30 years at the topmost techno-commercial levels of true multinational giants like Dow Chemical, Altana, and Corteva AgriScience. And they represent a tremendous asset of our company. Dr. Jim Ringer, Dr. Norbert Pflugen, Mr. Raymond Roach, and these are relationships these are positions that have come from personal relationships that we have shared over the last 10 years with these 3 gentlemen. So with this, we'll be looking at adding new competencies, diversifying business segments, going forward, going backward, and also looking at strategic acquisitions in Europe and USA with the help of these 3 gentlemen. I'll go to the final slide now, which kind of summarizes all the salient points of the company. The true story of this 8x8 metrics of chemistry and technology competencies, which forms the base of the company, which is truly unique, niche, and differentiated, completely R&D driven approach, 3 successful business models in 5 years of manufacturing, most of the products for the first time in India. Of the 8 products we are highlighting in the RHP, we are the largest for 4 in the world and the only ones for 7 in India. An already existing rich infrastructure of R&D, pilot plant, and production, and aggressive expansion plans across all 3 platforms. A truly unique team driving from the top by the promoter family, an unprecedented expert global business development and technology team, and a 700 plus staff with an average age of 32 years. Really some of the best names in the world as our customers in innovator multinational companies across the industry spectrum. And we are one of the fastest growing spec chem companies in India today with a CAGR of 50% over the last 3 years. So we'll stop talking. Thank you again for the opportunity to present here to this audience, Deepak ji, and more than happy to answer any and all questions that you might have.
So before we have other questions, I have a couple of questions, if you like, Dr. Aman. Hello.
Please go ahead. Please go ahead.
Yeah. So you mentioned about three gentlemen from US and Europe who are now associated with you over the last year or so. So how do you think we will benefit out of it, and how will we compensate them?
In terms of compensation, unfortunately, cannot disclose that.
Okay.
And they're also privy to they also have enabled ESOPs with them as well, in addition to compensation, and so which is quite attractive, and that will be announced soon. But in terms of benefiting from these three gentlemen, we are they represent a tremendous asset to the company, and we are looking at and they're already engaging across the various value chain in the company, starting from direction of research and technology and projects within the company. For example, Dr. Jim Ringer has a bi-weekly call with all of our research group leaders. They also participate in business development for the company, and so you walk into excuse me 1 second. Deepak ji, can you hear me fine?
Yes, I can. Go ahead.
Yeah, so they participate in business development for the company. They do technology direction and project direction for the company, and then they also are talking on a macro level for strategic acquisitions, for assisting in strategic acquisitions of the company based in US and Europe. And so they're a great asset that the company has, and we'll be looking at maximizing the potential that they represent. Deepak ji, are you still there?
Hello. Yeah. You go ahead, Dr. Aman. We can hear you.
Yeah, so we finished answering the question. So if there's further questions,
Okay. The other question was about the money that you have raised over the last 6 odd months. How will that be used, and how will that sort of translate into revenues and margins? How soon will that be translated into revenues and margins?
so we are using the IPO proceeds to bring main object clauses to new greenfield production sites, and making the company debt free. And the capex for the two new greenfield production sites is going to be 190 crores.
Okay. And the production and the sales will start coming in from which quarter or which year?
The production will start in this calendar year for site 3, and site 4, the production will start in the next calendar year.
Okay, fine. Are there any comparable companies? You have given peers in the RHP, but are there any business-to-business comparable companies in India or abroad?
We do believe we have a unique charter on account of the business models that we have and the customers that we have, and the fact that we are making these products for the first time in India. And so we do believe that we have a unique charter. But in terms of companies we look up to, DBs of the countries are doing fantastic CRAMS operations for pharmaceuticals. Deccan is doing extremely well, although it's an unlisted company. It's doing extremely well in the agrochemical space of content manufacturing. The Lonza globally is a gigantic specialty chemicals company doing having a wide portfolio of services and business models. Clean Science is doing very well in terms of the top line and bottom lines that they're posting, and also in terms of the core competency focus that they have of their company. And so these are some of the companies that we look up to and talk about.
Okay. Right. So I think that sums up the Q&A session. Thank you, all of you, for enlightening presentation. A lot of the doubts which people would have in their minds would now be cleared. Thank you, viewers, attendees, for attending this webinar, and we hope we have been able to add some value to you, to your thought process. Thank you, and all the best.
Thank you
for
very
having
much
us. Much
for
Thank you so
appreciated.
much. Thank you. Bye.